So executives at Discover have a big job. They have to stitch together their 3 card networks so that they can compete better with the bigger players. And there's a big question out there right now as to what the impact of that Justice Department settlement with Visa and Mastercard will mean for the rest of the industry. Joining us now is the President of Payment Services for Discover, Diane Offereins. Thanks for coming in
great
and chatting with us. Let's talk about that recent settlement first and tell me how Discover factors in here, because you weren't named in the suit.
Right.
And what we heard from the Attorney General after Visa and Mastercard settle, Amex is still fighting it, it was positioned as a win for the consumer. Is it?
Well, I think that, first I'd like to say that we were thrilled not to be part of it. We pride ourselves on, finding a way to partner with merchants and banks. And I think it's yet to be seen whether it is going to be a win for the consumer. At the end of the day, I think most merchants want people to come in, shop, pay, and have a good customer experience. So the idea that there's going to be a lot of negotiating at the point of sale, I'm not sure about that.
So in theory, with this settlement, it sounds like the playing field is supposed to be leveled. It's supposed to be creating a more competitive environment. Is that the reality for Discover?
Well, I think the reality for Discover is with change comes opportunity. And we're going to be very aggressive about making sure that we create opportunity with this change. And so I think that if you think about our size compared to some of our competitors, I think we always look at these kinds of serial events as ways to go in there, be aggressive, and find ways to drive more business to our company.
So you think there's potential to
Yes.
grab more of the market share
Absolutely.
as a result of this?
Yes.
Because we do know American Express is still trying to fight this. They have not settled, but the argument on their part is it's actually not helpful to the consumer. It's actually going to be onerous for them. What's the risk there? Well,
I think the risk is, American Express has a business model that they have a premium price to bring a premium consumer into the store. And so they, naturally would want to fight to have the right not to be discriminated against at the point of sale. So that, certainly makes sense from their perspective. But I think to the the majority of the consumers, they want to have the opportunity to select their payment device and choose, what they want to pay with. And I think the merchants, at the end of the day, are going to move back to a place that says, we're gonna do what's best to drive business into our environment.
Now, internally at Discover, you're trying to integrate, as we said in the introduction, you have 3 different businesses here. Tell me about the progress on that part. What does it mean for a customer of yours?
Yes. So if you know, about 2.5 years ago, we bought Diners Club International, and for the past 2 years, we've been working on integrating our Discover domestic network with all of the acceptance opportunities that Diners International brings. So for the last 2 years, we've been stitching, as you said, these 2 networks together. And in essence, we've created another global network by putting Diners, Discover, Pulse's global ATM footprint together. So we believe we're creating another competitor that banks and merchants can leverage.
So what are you seeing in terms of your customer base and how they're using their cards at transaction? What their rate of repayment is right now? What are you seeing?
Well, I would say, clearly the economy is a challenge for everyone.
Mm-hmm.
So we're seeing at least our market share continues to grow. We've improved our acceptance dramatically, so we have more utility for our card members. So that, I think, has helped us weather this particular economic storm a little better than others. We see a big shift to debit. Consumers are transacting a lot more with their debit cards and their credit cards. And we're seeing that they're using their cards more frequently, but for lower average ticket prices.
Now, you were saying that your market share is expanding. You expect it to do so even more. Is it easier or harder to get a credit card right now?
Well, I would think
than 2 years ago.
I would think it's reasonable to think that in this environment, credit criteria is probably a little tighter. And let's not forget that the majority of the consumers have credit cards already. Mm-hmm. I think the battle is to make sure that your best customers have more opportunity and you take a bigger share of their wallet. And I think that Discover is very, very focused on that.
So do you see Discover as one of a portfolio of cards for a consumer, or are you seeing more of a shift towards your card as prime usage?
Well, that is clearly our goal. We want our consumers, and that's why we've invested so heavily in expanding our acceptance. We want our consumers to be able to use their product. We think the best product, Discover, anywhere they go. And I think we've been very successful at expanding our acceptance footprint so that our customers have more utility. We move to the front of the wallet. That's our goal.
All right. Well, we'll see what happens with that progress.
Right.
Thank you for sharing your perspective with us.